Chair for Brent. What does that TAAD stand
It is
for?
the Texas Association of Appraisal Districts.
All righty. And you are also the esteemed Chief Appraiser for Hunt County. Is that correct?
I like to say that right now I'm the most popular man in Hunt County. That's right.
There you go. You might be on some wanted posters or something else. But Brent, we've already had the pleasure of having some discussions off camera, and really this came out of obviously the frenzy of all the assessments going out. I think that was like a week and a half ago, and so. Immediately, we thought for our realtor members and the actual public, let's actually get the truth and transparency around the appraisal process from the county. And you were the one that said, unfortunately, I'm it. So we appreciate you joining us this evening.
Well, I'm extremely excited to be here, and I'm appreciative of the opportunity because I do think, and actually you and I talked off camera a bit. The realtor community, if we can partner with you guys and gals, I mean, y'all can get the message out way better than we can. If we can get your members to understand the process and educate your clients on how the property tax system works and how exemptions work and what to file and when to file it and the protest process, y'all have a much better much greater potential to get that information out because you're talking to these folks, homeowners, buyers, and sellers every day. And so we appreciate the opportunity to be a part of this.
Absolutely. And that's the thing too. This is very confusing. Even for seasoned realtors, there's ever changing exemptions rules. We've got propositions that we're about to vote on. The Homestead Exemption timeline changed, all of these other things. And so we like to make things clear as mud when we're trying to make them better occasionally. And I think that's kind of where we're at right now. And so I'm just going to start us off. And please, we encourage all the questions. Brent and I are already prepared that this might be one where there's some unpleasant things. There's some people that are just upset with what's going on, and rightfully so, because guess what? This is what I said to Brent the other day. I'm pretty sure he knows people that own homes in his own family, and you don't want to see anybody taxed out of their property or doing that. But we need to start the conversation with, how does this work? Because I like to say that assessment is the final piece of the puzzle, and that's the reactionary piece that gets everybody to start dialing and texting. But what is the crux of what you guys do with those assessments? And we'll start there.
Yeah, absolutely. The appraisal district, we were created back in 1979 by the Texas legislature. Every county in the state of Texas is required to have a centralized appraisal district that does property tax appraisals for the taxing units within the boundaries of that county. And we have a constitutional and statutory requirement to appraise every property at 100% market value every year. And the property tax system, it's a very simple formula. There's three pieces to the formula. There is the revenue needs for the taxing units, your cities, counties, hospital districts, school districts, special districts. They set a budget. Mm-hmm. The appraisal district appraises properties. We certify the appraisal roll and we ship it over to the taxing units, and it's a very simple math equation. It's their budgetary needs divided by the amount of value they have on the tax roll to set a tax rate. And you hear a lot of people talk about when the property tax appraisals come out that their taxes have increased. Mm-hmm. And we don't know that. No one knows what the tax bill is going to be until the taxing units set their rates in August and September. So right now, even with the significant increases in appraised values, everyone's tax bill currently is zero because there has not been one single tax rate adopted at this point. And so what we encourage people to do is look at those appraisal notices and determine, is the value that the appraisal district has set on your property accurate? Meaning, could you sell your home or your piece of property for what it says on that piece of paper as of January 1st of 2022? If you think we've got it overappraised, come talk to us. I tell people all the time, though, don't come to our office, please, to protest your taxes. we can't help you with your taxes because we don't know what your taxes are going to be
Sure.
at this point. We're dealing strictly with value, but we do have a requirement under the state law to appraise those properties at 100% market value, meaning a willing buyer, willing seller, what y'all would negotiate as a sale price as of January 1st each year.
So this is the hard part. And I have to be then the bearer of bad news to my clients when they're texting me going, oh my gosh, Ashley, should we protest? And I look at my phone and go, no, that's a gift because I could probably sell your house for $200,000 more.
Yeah.
But if you look at, there's also a piece of that assessment that comes out, and that's the, appraised value and then the taxable value. And so that's the other thing too that I think confuses people. And so just breaking that down, and we're going to go into more detail, guys, on the ugly stuff, the things that everybody wants to get more in depth about, but we really need to get those, like the nuts and bolts of the conversation, out of the way here in the first few minutes. And that's important because that taxable value is because there's exemptions that people can actually apply for. So the one that's swirling around right now is the homestead exemption. Because correct me if I'm wrong, Brent, but that homestead exemption has a couple of different things. One, it's electing that this is your homestead, your primary residence in the state of Texas. That gives you right now in most areas a $25,000 tax break or a reduction on school taxes, and then sometimes on some of the other ancillary taxing entities as well. But primarily that's school. And then we also have the ability to get a cap, meaning if it's your homestead, that even though market value might be a lot more, year over year, your increased, taxable value can't be more than 10% from the previous year. Is that correct?
You nailed it. That's exactly right. The homestead exemption, if you're a homeowner and it's your primary residence, make sure you have that homestead exemption because like Ashley said, it provides really two levels of relief and protection. It gives you that $25,000 mandatory exemption for your school taxes, which by the way, early voting is already open. There's an election day on May 7th. If you want to give yourself some additional property tax relief, vote in favor of Proposition 2 because what that's going to do is increase that homestead exemption from the mandatory $25,000 for school taxes up to $40,000 on your school taxes. So if your home is appraised at $200,000 market value, then for the calculation of the amount of taxes, the taxable value is going to be $40,000 less than that, and that's what we're going to tax it on, or that's what the taxing units will calculate the tax levy off of. But to me, one of the most important protections that the homestead exemption provides is that 10% cap.
Yes.
And there's a lot of confusion on that. The 10% cap, just for easy numbers, let's say last year, if we had your home appraised at $100,000, and then for 2022, we reappraise it based on current market conditions, and it goes up to $150,000. Well, the market value will go to $150,000, but your cap value, your taxable value, what your taxes are calculated off of, will be capped at $110,000 because of that homestead 10% cap limitation. Now, in subsequent years, let's say the following year, if the appraised value or the market value stays at $150,000, well, your taxable value will go up again another 10%. Until the gap closes between market value and taxable value. One of the things that it's always difficult to understand and explain to property owners, if we ever see a downturn in the real estate market and values start to decrease, if you have a large cap, if your property is market value $200,000, but your cap is $120,000, and let's say if the market comes down and we lower your value to $150,000. Well, even though we lowered your market value, that next year your taxable value is still going to go up. So there is a lot of confusion on how that works, but it is a great protection. It keeps homeowners from getting the full brunt of these massive increases in value that we've seen this year. And it's a statewide issue this year. We polled chief appraisers across the state, and we assumed that in the metro areas or anywhere close to a metro area, we were going to see some pretty significant increases. But even in rural Texas, we're seeing 20, 30% increases as the average increase on homestead properties this year. And that's just due to what's happening in the real estate market here in the great state of Texas.
Well, and I love that you say the great state of Texas, because of course everybody is sitting here and discussing the fact that there's outside influences that are creating this appreciation increase at a rapid nature we've never seen before, and that is true to an extent. But you know, I was discussing this with you. There's been other studies done that, you know, Dallas-Fort Worth specifically, North Texas, is a major metropolitan area that rivals, you know, Chicago, New York, Los Angeles, you know, all of these other areas that have been booming for a very long time. And Dallas-Fort Worth is in that mix. We have been the most affordable major metropolitan area for years. And I think what's happening, unfortunately, is that, again, we had a big gap in between, you know, those affordability factors with these other areas. So while we are getting people that are coming from out of state and everything else, they're coming to the great state of Texas because they say, we want this land of opportunity. And it's not just because of home values. It's because I think we just recently had another forecast, and it was, if Texas was actually a country, we'd be the 9th largest economy in the world. And so people are saying, no, we want to prosper just alongside you guys. And they're willing to pay a premium. So yes, let's get to the dirty part of this. Hold on one second, Brent. Matlock Realty with James Matlock, except for investment properties, correct? Yeah, well, that is correct.
I'm assuming you're talking about the homestead cap.
Correct.
So, right. So the 10% cap only applies to your primary residential homestead property. That's correct. So if you have rental properties or investment properties, you currently are not capped. And that brings up a really good point and a good question. And Ashley, maybe we're going to go here, but I'll go ahead and jump in.
Let's do it.
You know, there's a lot of talk right now amongst the legislature about property tax relief, especially with these appraisal notices going out statewide, values going up so drastically. You know, the Speaker of the House in his interim charges to the House committees has said study property tax relief and appraisal reform. The Lieutenant Governor in the interim charges to the Senate has said study property tax relief and appraisal reform. And they're trying to figure out, they've got $3 billion in this federal COVID relief money that they don't know how to spend. And they're trying to determine, can we spend this $3 billion on property tax relief? Can we buy down school taxes? Can we spend more money to buy down or compress the school district tax rates? Or one idea that's been floated out there is, can we find out how many homestead properties there are in the state of Texas, divide that into 3 billion, figure out what that number is per homestead, and cut everybody a refund check. So there's just all kinds of ideas about property tax relief. But I think what they need to consider is, if they're going to do something, it needs to be a permanent solution. I think that they need to do something that can be carried forward. I think a one-time refund check to property owners of $300 is really not going to be what people want when they see property tax relief. You know, 2 sessions ago, we had Senate Bill 2 and House Bill 3 that slowed the growth of property tax, but it really wasn't property tax relief in the form of, my tax bill was $5,000 last year, so now it's $4,000. That's relief. Instead, it was $5,000 last year. It's only $5,500 this year, but without those bills, it would have been $6,500. So it's not really a reduction in the property tax. It's just a slowing of the growth of the property tax. And people don't want that. They want to see their actual tax bills come down. And we hear a lot about appraisal reform. And I find that very interesting when you talk about appraisal reform, because the Texas legislature mandates that we be at 100% of market value. And there's only you know, a certain way that you can appraise property. There's really 3 approaches to appraising property. There's the cost approach, the income approach, and the sales comparison approach. And of course, in the state of Texas, we are a non-sales price disclosure state, so we don't have sales information on all transactions. So we rely heavily on the sales comparison approach for residential properties, but for commercial and income properties, we use the income approach. But when you talk about appraisal reform, I don't know what that looks like, because there's certain generally accepted appraisal standards and methodologies that we follow USPAP, we follow the property tax code. The only thing that I can think of on appraisal reform that would be beneficial to property owners and homeowners is if they increase that cap or reduce the cap. Let's say if they took it from a 10% homestead cap down to 5% or down to 3%. Or if they wanted to give property tax relief to all property owners, they could expand that cap outside of the homestead and give the cap to investment properties or to commercial property owners or on vacant land. So another thing that they could do is put in place assessment ratios. They could tell the appraisal districts, hey, instead of appraising at 100% market value, we're going to redefine market value, and we're going to tell you, you only now have to appraise at 60% of market value. The challenge with that, if the appraisal district lowered everyone's value, I tell people this all the time. I could go in right now and I could put a 50% modifier on every property in Hunt County, and I could, in an instant, reduce everyone's value by 50%.
But what goes up? What goes up, Brent?
That's right. That doesn't mean your taxes are going down 50%, because when the taxing units get those numbers and adopt their tax rate, guess what? They're going to have to double their tax rate because they still need to generate revenue to operate. So a 50% reduction in value does not equate to a 50% reduction in property taxes, because at the end of the day, it is the elected officials of the taxing authorities who determine how much you pay in property taxes. Again, it goes back to that simple equation I mentioned earlier. It's our appraised values that we have on the appraisal roll sent over to the taxing units. They determine how much money they need to operate, and then they do a simple math equation to decide what tax rate do we need to adopt to generate this revenue based on the amount of value we have on the tax roll.
So, Brent, that is probably one of the best explanations of that I have heard on that, because I think people will get stuck on one layer. And so what you just said about, yeah, you could do a 50% reduction on all the appraised values in Hunt County, but then the elected officials, when they're adopting the budget and the tax rate to fund that budget, it's going to go up. Now, I have to call out Adventure Taco, because I think they have the actual best name I've seen on Real Talk yet. But how are y'all talking about wholesaling? I've seen on several occasions from New Western where they buy a property, then immediately relist it for 20 to 30,000 more, completely messing up the true data. So, Brent, I want to throw something out here right now. One, we're looking from a Texas realtor standpoint, the fact that, yes, wholesaling has a lot of different things, that a lot of components that go into it. And this is one of those components where, you know, they're coming in and then they are turning around and relisting at a higher price. But I don't know, and correct me if I'm wrong, I don't know that wholesaling is really messing with the figures as much as, we're not going to use certain names because, you know, we're not going to get into an issue with disparaging, you know, another brokerage firm or anything else. But there are a lot of iBuyer, instant buyer platforms that are going in, hedge funds, REITs, different things like that. And they are consuming a lot of property and buying up a lot of property, and have been. It's been in national news, and there's been some speculation if they're then turning around and trying to, you know, correct the values strategically through taking a big influx of properties, selling some at a much higher value, and then therefore it's kind of reconfiguring, you know, the market value in some places. Has that been any conversation that you guys have had?
You know, we haven't seen as much of that in Hunt County as probably there has been in Dallas County. That would be really a better question for some of the larger metro areas. But what I will tell you is that what we look at in the way that we operate under a mass appraisal system, the very first thing we do is our appraisers go out and they collect data on every property in the county. That's when you'll see our appraisers out driving through neighborhoods, taking photos, taking measurements, collecting data to make sure we have all the characteristics of each property accurate and correct. Then we talk to builders. We talk to local builders about what it costs currently to build a new house, what material cost is, what labor cost is, what soft cost is, soft costs would be. And so we develop cost models. Then we break each county down and each city down into market areas, because we all know market value in real estate is location, location, location. The same house on the east side of Hunt County, sitting on the west side of Hunt County, are going to have two completely different sale prices.
Sure.
So we identify the market areas within the cities and counties, and then we try to gather as much sales information as we can, and we test those models against actual sales data points, and then we calibrate the models. So if we have a market area where people are buying these homes and then turn around and listing them and selling them for a much higher price, if that is prevalent enough, it will drive those market calibrations that we have on our models. It would have to be a significant amount of those to really make a difference, because we're looking at averages. But I had a gentleman ask me at a town hall the other night. He said, I know for a fact that I've got 5 people in my neighborhood that have just bought their homes. They're all from out of state, and they paid $300,000 plus for their homes, and those homes just aren't worth it. They're not worth that. Mm-hmm. Why is it fair that I'm going to get hit with a higher appraisal because people are overpaying? And I said, well, let me answer your question with another question. Knowing the information that if you were to list your house tomorrow and you knew that 5 homes in your neighborhood just sold for over $300,000, what are you going to list your home for? He said, well, hell, I'm going to try to get $300,000 for it. And I said, that's
Bingo.
right. That's your value. That's exactly right. And so
that's the definition of market value, Brent.
That's right. That's right.
Yes. And I think that's the hard part, is that's that whole you want your cake and eat it too scenario. I don't want to be taxed at fair market value, but if I get squirrely and want to capitalize on my equity, I sure do want to make sure that I can sell my house for that amount. And I understand it's a double-edged sword. Heck, I don't know, Brent, do you live in a home?
I do.
I do. Yes, so do I. And mine actually went up $100,000 last year or this year. So I'm just telling you that right now, because that leads me into Angela's comment, which actually, Angela, that was the crux of reaching out to Brent and trying to get this done, because in an effort to make things easier, that clear of mud kind of this situation, we can now file for the homestead exemption the minute you purchase the property. And that's something that is super important, but that doesn't mean the 10% cap goes into effect right away. So I threw our great wizard off because I went on a tangent and said Angela, so he was trying to get the question up there. But when does the 10% cap on homestead properties take effect, now that homeowners can file for a homestead immediately after purchasing? Is there a cutoff date for when the homestead must be filed in 2022 in order to have the cap in 2023? So
the first thing about that question, Angela, I want to make sure that you all understand the way that the new law reads. It's Senate Bill 8 from the 3rd special session of the legislature. And it does say that a person can now qualify for their homestead exemption mid-year. In years past, it had to be as of January 1st that you own the property. Now you can get it mid-year with a caveat, assuming that home did not have a homestead exemption from the seller. So if you're buying a new build, that's great. If you're buying someone's rental property, that's great. But if you're going and you're purchasing someone's home that already had a homestead exemption on that home, you're just going to continue on with that. You're going to get the benefit of their homestead exemption for the remainder of that year, plus whatever cap they have. And then on January 1, the cap's going to reset and you're going to start with your homestead exemption. What they wrote into that law, Senate Bill 8, if you do purchase a home that did not have the homestead exemption, so you qualify for your homestead exemption in the middle of the year. The law is very specific that your cap does not go into effect until January 1 after the first full year. That you own the property. That's right. That's right. And what they're trying to avoid, because it's really a tricky situation. And appraisal districts, we're kind of scrambling right now to understand how to implement this law, because let's take an example. If someone purchases a home in August, but our appraisal date is January 1. Well, if it was a vacant lot on January 1, they can build a house pretty quick these days. Well, assuming they can get materials. But let's say if they buy the home in August or September, are we allowed to put that prorated partial, portion of the year homestead exemption on a vacant lot, because the value for that year is just the value of the vacant lot. And so we're talking with Senator Betancourt's office about that to try to get some of those questions answered. But what they're trying to avoid, if we did put the homestead exemption on just the vacant lot, and then you could get a cap the very next year as of January 1, you're going to have a huge cap because it was a $40,000 lot last year, and now there's a $400,000 home on it. Well, 10% of 40,000 is only $4,000. You're only going to see a $4,000 increase on a $400,000 home. So they wanted to prevent those types of situations. So I don't know if that's kind of a long way to answer Angela's question.
No, but that makes more sense, because I'm in the same boat. I bought my house, summer of last year. There was a homestead exemption on my property. So I wrote out, obviously that homestead exemption, because the new law didn't go into effect until 2022, January 1st. And so now I filed for my own homestead exemption, and I have the same question. And I'm, a realtor and an advocate and involved in tree pack and all these other matters. And it was still confusing for me, going, okay, but are they simultaneous? I have my exemption, but when does my cap start? And the answer is, Angela, I bought my house in the summer of last year. I was able to file my homestead, for this year, but my cap actually doesn't start till January 1st of 2023. And I think that's the confusion for some people right now was, hey, we did this great thing. And Senate Bill 8 was great, but really the people that benefited from it were the ones that were purchasing non-homesteaded properties to be able to get that $25,000, reduction. And hopefully 40,000 if everybody goes and votes for Prop 2. So get out there and do that. But that's really where you get that benefit. It's not the cap. The cap is going to happen after the first full year that you're in the home.
And one of the reasons that they wanted to clarify that the middle of the year homestead exemption would only apply to a property that did not already have a homestead exemption is because if you think this through, let's say if you could get your own homestead exemption in the middle of the year and knock off the previous owner's homestead exemption, you may be harming yourself and not realizing it. Because if that person had a large cap and you come in and buy the property in September and you say, no, I want my homestead exemption prorated for the rest of the year. Okay, we have to remove their homestead exemption, which makes the cap go away. You're going to actually increase your tax liability for that year. So that's why they said that it can only be applied to properties that don't already have a homestead exemption.
Okay, so Brent, we didn't talk about this the other day, so my mind's kind of going. And hold on, Angela, yes, you are correct. So for buyers purchasing in 2022, the cap starts for 2024. That is correct. So that's a great way to clarify that. So I'm like, riddle me this, Batman, because that's what went into my head when we were sitting here talking about this, is let's say the person that owned my home previously goes and buys a non-homesteaded property. Okay. So he doesn't just go to somewhere else that has a homestead or rents or whatever. They go and buy a new construction or an investment property to live in as their primary residence. And they go, no, I want to file my homestead now on this. Does that mean my homestead would have been removed because there was one in place when I purchased my property?
So that is the $1 million question. They're currently in that scenario that you just mentioned. There's not a provision that would allow us to remove the homestead from the property that you sold. So there's going to be instances where, the state law is very clear. You can only have one homestead in the state of Texas. But under this new Senate Bill 8, there's potential for situations where you may actually have multiple homesteads for a portion of a year. And that's one of the things that we're talking again with Senator Betancourt's office about. I think we're going to end up having to get an attorney general's opinion on how we handle those situations, because we want to apply this consistently. One of the things that we hear statewide from property owners who own property in multiple counties is that appraisal districts across the state aren't always applying the law consistently. You know, Hunt County may do it one way and Dallas County does it another way, and Collin County does it a completely different way. So we want to try to be consistent on how we implement this. But it's a very confusing, it seems like a very simple solution, but it's caused a lot of downstream effects that are kind of complicated.
Well, again, because I like to think I educate myself, especially on my real estate subject matter, and I was confused, and I reached out to my preferred title partner and said, can you pick up your bat phone and talk to the people at the appraisal district that you talk to, and even they were confused. And they're like, we're trying to figure this out. And so I that just happens, and unfortunately we had the best of intentions, and now we're seeing some repercussions from not really going through all of these different situations. So Karen, it takes 2 years for the cap to start over. It's not necessarily 2 full years. It's just the fact that you have to be in the property January 1st, correct?
After a full year of ownership. So let's say if you bought the house in November, then it would be in November of 2022, then it would be January 1, 2024 when it goes into effect. So it really, that would be 14 months.
14 months.
13 and a half months, whatever the case is, right?
Correct. So it might not be the full 2 years, but in actuality, Karen, it could be 23 months. It just depends on when you're purchasing the property. And so that's something that I think is really important that the realtors that are watching this right now understand. Please do not tell your clients that because of the new homestead law that you guys are covered mid-year and your cap will go into effect immediately the next calendar year, because that's not the case. As Sherry Fearbacher just noted, full calendar year. And Brent, you don't know Sherry, but that's my mother and my business partner, and she is the broker. And so we were going through this as well. We were making those phone calls and trying to figure it out, because we need clear, concise answers, and we want to get that messaging out appropriately. So yes, Gary, it could be as much as 23 months, as I was saying. So we just need to make sure we're disseminating that information appropriately. And also we need to make sure our title partners are disseminating that information appropriately, because sometimes they're the ones that are discussing that at the closing table when we talk about exemptions and tax certifications and all of these other things. So yes, Karen, I'm glad we could clear that up, because Karen said, got it, I had that incorrect. And that's what the purpose of this is right now, is to have somebody like Brent, who's a wealth of knowledge, to be able to answer these questions. All right, Michelle, the homestead exemption protects the homeowner in case of bankruptcy, right?
So the answer to that is depends. The tax lien always is going to take precedence, is my understanding. Now, you can always, if you meet certain requirements, if you're over 65 or disabled, you can file for your deferral to where you don't have to pay any taxes until you either sell the home or upon your death, and then your heirs will pay the taxes. But really, that's a legal question for the delinquent tax attorneys and the tax assessor collectors, which fortunately we do not do at the appraised property. We don't want your money. Please don't bring us your money unless it's cash.
Brent, that is one good thing about what you do. You could sit there and say, not my problem.
And I hate to do that. I hate to pass the buck along, but I don't want to give incorrect information on something that I'm not an expert on. Right.
Okay, so Karen came back with another question about the 10% cap. If the value increases year over year, is the
Ashley.
okay? I know. I came back. I popped out because that's what I told you, Brent. Now you get to be me, and I
There
get
you
to
go.
be the most man in the state of Texas.
Let me ask you some questions now. Yeah.
Put me in the hot seat. No, we'll fix it in just again. We're back, Karen. I promise you, we're back. So her question was, if the value increases year over year, is the 10% calculated on the market value in the next year? So I think what she's trying to say is, I'm going to break it down for my other real estate partners because I know where she's going with that.
Mhm.
But so again, using my situation, I purchased my property in 2021 and I got an assessment, after I purchased my property. And then I have, my new assessment out and it went up $100,000. And so now my assessment for this year, Karen, went up $100,000. So that means when I get my 10% cap in 2023 on my taxable value, it's going to be based on that $100,000 increase from 2022, correct?
No, the 10% cap is going to be based off of 10% increase over last year's capped value. So and that may be what you said. I'm not sure. So let's go back to our scenario using the easy math where you have a $100,000 house last year. The market value increases to 150 this year, but it's capped at 110 because that's 10%. 10% of 100,000 last year is 110,000. Let's say even if the value in the following year stays at 150,000, the 10% cap, the taxable value will go to $121,000 the next year because it's 10% of the 110,000 cap value from last year.
I think what she's talking about, Brent, though, is my specific situation that I was confused about was, let's say, again, using round numbers, I purchased my home. Last year's was 300,000. And then I just got my tax bill. I bought my house mid-year last year. It had a homestead exemption on it. I wrote it out through 2021. And then now 2022, I open my assessment and go, whoo, it went up $100,000. And even though I filed my homestead exemption, I haven't been in my home a full calendar year, January 1st to December 31st. So now this year, I applied my homestead exemption, but my value went up 100,000. So in 2023, when I get my assessment, my 10% is based on a new assessment or this 400,000?
The new assessment for this year. That's correct. So if I'm following your scenario properly, if you bought your home mid-year 2022,
yep.
Then on January 1, 2023, whatever the appraised value was, that's your base year. January 1, 2023 will be your base year.
So this year is my base year because I bought mine last year. And so now my base year starts this year. Right.
And next year, your taxable value cannot be 10% more than whatever it is this year. That's correct.
Yep. So that's what I was saying. So and this is where it is. It's clear as mud for all of us. We're trying to figure out all these other scenarios. So Karen, I basically, it is, my value went up $100,000. I bought my house mid-year last year. My new assessment is $100,000 this year. I applied my homestead exemption this year, 2022. This is my reset. So it's now 400,000 next year. My property, my taxable value cannot go up more than 440,000 on my taxable value. So hopefully that made it clear. If not, you can ask something else. But Lisa asked, do you have any idea how many counties have access to MLS sold data? Ooh, Lisa, that's a question that, that's a tricky one. I don't think it's a county situation, right?
Well, so there are counties that have it and there are counties that do not have it. And then there's also, what's really interesting to me is that there are counties that do not have access to MLS, but yet and most of you may be aware of this, the state comptroller's office studies the appraisal district's values. They do what's called the property value study. And the purpose of that property value study is to ensure equitable distribution of state funding for public education. So in those counties, there are some counties that do not have MLS information, but the state does have MLS information, and they can use that information against the appraisal districts when they do that study. I think that there's a lot of appraisal districts out there who feel that's extremely unfair, that the state has information that they can use against the appraisal district when we didn't have that information to establish our appraisals in the first place. But the numbers, I don't know the numbers of how many counties do or do not have access to MLS.
Well, and I know we could belabor this for a long time because, like I told you, Brent, this was a really confusing point, and I know we wanted to make sure that we understood the homestead and all of these other things, but we only have 20 minutes left. This goes really, really fast, and there's some other topics that we want to make sure that we have your expertise on. And so the next one being is hearings, the protest hearings, because that's obviously what we're getting inundated on is, Ashley, please help me. I need to protest my taxes. You know, I can't do this. And again, these aren't your taxes. These are your assessed values. So that situation is you want to protest your assessed market value from the appraisal district, which that's the different vernacular that we need to use, guys. It's not somebody saying I need to protest my taxes. Those are two different things. So, but somebody comes to me and says, Ashley, you know, here was my assessment. Do you think that this is fair? I'm going to look at it most of the time right now. Unfortunately, yes, it is quite equitable and you guys are protected and take it as a gift. But there are some scenarios where I say, you know what, I am seeing that there's a dip, or you have functional obsolescence because I already know you need to do foundation work. Your HVAC units are out of date. You guys need brand new windows that are $25,000 to have, you know, all of these other things that we're seeing get a lot of value in our marketplace. And so that's where we can sit there and say, yes, I think this is an opportunity to protest your assessed value. So what can we do there, Brent? And let's only spend a couple of minutes on this so we can go to the next piece of that, which is getting people involved as well. But what can we do when we are trying to protest that assessed value?
Absolutely. Number one is file your protest timely. There's a deadline. In Hunt County, it's May 19th. The deadline to file is actually May 15th, or 30 days after the appraisal district delivers the notice. So make sure you know when that 30-day deadline is. File it timely. File your protest if you think that your property does not fit the model that we created. Remember, we talked earlier about mass appraisal. We have a market area for where your home sits. If you think that your property has some characteristic about it that makes it different than what would be normal, and like Ashley said, if you got foundation issues, if you need a complete remodel, if you haven't updated in 25 years, those types of things, we need to know that, because when we're doing our appraisals, we're only seeing half the property. We're seeing the outside. We don't go inside people's homes. We don't know what the condition is, but we need property owners to come tell us. And that's what this 30-day protest period is for. But when you come in to meet with one of our appraisers or to go before the appraisal review board, bring evidence. Please bring evidence, pictures, repair estimates, fee appraisals, any and everything that you can bring that will show us and help our appraisers or the appraisal review board understand why your property is different than other homes in your neighborhood.
So that process can be done online, and I think that's what's great is we have that option. And again, if you have great vendor partners, you can have your clients sit there and take photos and say, hey, this is what my bathroom looks like. It's from 1978. Can you give me a, just a general real-time, visual, estimate? That doesn't mean that you need to get 72 contractors in your house. Right. Especially if it's cosmetic, to be able to give you an estimate on that. But the appraisal districts do need some support to say, my house is a piece of crap. Don't just put that in a protest. And I've had people literally try to tell me that before. And I'm like, okay, but you need timestamps. It can't, different things like that to just basically say, yes, my house is a great asset, but unfortunately I have to put $100,000 into it to be able to meet the value of my neighbor. And I think that's really important. So let's see. Kata Woods just said, how and why comp properties with overpriced property that didn't. Okay. So she's basically meaning, can we sit there and have a box that says there was an appraisal waiver or something else where somebody shot the moon? Because that's what we're seeing a lot in our marketplace right now is sometimes people are coming in and saying, I have a lot of money, so I don't mind putting an extra 50 on top of it, even if it's out of whack with market value or appraised value. But again, this is a mass appraisal system. So you guys aren't just looking at one or two or three situations. You're looking at it as a whole.
And we're not allowed to sales chase. We're not allowed, if we were to find out the sale price of that property, and let's say if it sold $100,000 above what any other homes in that neighborhood are selling for, we can't pinpoint that one and just say we're only going to raise that property to this value. It may be included in our mathematical equation in our analysis, but it'll average it out. And so, but a lot of times if we see those outliers, we do try to identify outliers and kick those out. Anything that looks abnormal or non-typical, we do try to remove those out of the equation so it does not skew the data, because we want to get everything across the board at the right value.
Well, Brent, that's the same thing on distress sales. I'm not trying to be the devil's advocate here, but we could say the same thing. What if there's a distress sale in your neighborhood that brings down the property values of $100,000? Well, if you want to sell, that's the outlier, and you don't want anybody to consider that. And so those are things. I get it. These are things that we all are taking into consideration. But I think we really have to think of it as, where is market value? And market value and appraised value is very different. And sometimes, guess what? Market value is higher than appraised value a lot of the times, because somebody says, this house is more important to me to get my family settled in a school district, doing all of these things, and I'm willing to pay a premium. And in fact, I think I use this as an analogy. I did that with my Telluride because that was the car I wanted. Car and driver told me that was the best vehicle. I put 30,000 miles on my car a year, and I wanted something comfortable for me, my family, or my clients. And so I paid a premium for my Telluride. And so that's the same thing going on here. And yes, those are taken into consideration. But again, remember, this is a mass appraisal system. So, okay. So Jim, appraisers last year were independent, had not looked at materials that we had filed for protest, and we had to ask them to look at what we had filed. Apparently did not matter. The appraiser chose to compare an older apartment complex, which had been turned into condos, to a high-rise luxury apartment nearby. So Jim, I don't know exactly what you're talking about. Maybe this is more of a commercial situation. I don't know if this was an individual condo that you had and it was being appraised. But again, I don't want to spend a lot of time on that, Brent. And it's not because Jim's question isn't valuable. It's just the fact that there's a lot of layers there. And again, it goes to, it's not perfect, correct?
Yeah, sure. And obviously that's a very fact-specific situation that we'd have to know more details to be able to answer Jim's question. But we try to stick to as comparable of properties as we can. We don't want to look at apples to oranges. We want to be apples to apples. And so if we're looking at a comp that you feel like is not a good comp, that's one of the things that you can protest. You can protest equity. And you can come in and you can say, hey, appraisal district, I know that you're using these three properties as comparables, but I think I have three other properties that are much more comparable. Can we run the numbers using those and see if we're appraised equitably? And so, because the purpose of equal and uniform is to make sure everyone only pays their fair share of the property tax burden. And that is something you can protest, is equity, and present additional comps that you think may be better than what the appraisal district has pulled.
Brent, that's a great example, because we do that on a daily basis with the homes that our buyers are under contract on. And I will sit there and send it to an appraiser and say, hey, I've been in these other 4 homes that you might use as a comparable property, but this one was riddled with termites and had cigarette smoke in it. This one, backed up to a major road, but maybe you can't see that if you're just looking at the Google Maps, whatever else. And so from all of those standpoints, that's where we have to be the professional and tell our clients, hey, if you disagree, let me know and let me try to do some research as well and participate in that process with you. And that just allows us to continue to be an advocate for individual property owners' rights and to help our clients, because it doesn't have to be a divorce at the closing table, guys. You can continue to be an advocate for your clients afterwards, but we also have to be realists. And if somebody's property is appraising for 500,000 and you can sell it for 8, you have to give them a little bit of perspective. So now I want to completely divert, because we have 10 minutes left, and this is extraordinarily important to me, is for everybody to understand what we need to be educating the public about. And that is the fact that we are belaboring the assessed value, the market value of these properties, but that is not what your taxes are purely based on. We talked about budget and tax rates. So Brent, that's what I want to spend the last 10 minutes talking about, is what can people do to help right now as far as, hey, Mr. Local Official, Mrs. Local Official, I am being taxed out of my home. Yes, I want an appreciating asset. Yes, I don't want my home to lose value, but at the same time, I want to stay in my home, and I can't afford to do so with inflation, with everything else. And now my taxes are going up too. How do we fix that?
Well, and I want to share with you in the audience something that I got in the mail the other day, and I won't mention the name of the company, but this was from a company that represents property owners in appeals at the appraisal district. And it was a flyer to try to sign up new clients. And it says on the front of the envelope, your property taxes are increasing 44%. No, they're not. Number one, we don't know how much your property taxes are going to increase. If it would have said your taxable value has increased 44%, that's fine. But your property taxes have not increased 44%. And that goes back to our point from earlier. Nobody's property taxes have increased yet until those taxing units meet to adopt their tax rates. One of the things that you're going to notice on the notice of appraised value this year that is different is that there is no longer an estimate of taxes on the notice that comes from the appraisal district.
I did notice that.
Yes. And the reason for that, it was something that the legislature removed from the appraisal notice because they understood and recognized that it was a misleading, unrealistic number, because it was taking the new appraisal and applying it to last year's tax rates. And I'll tell you right now, taxing entities this year with the increases that we've seen in appraised values, taxing units will lower rates this year. They have to by law, because they can only go up 3.5% without voter approval. And so when you get that appraisal notice, no estimate of taxes on it, what happens once we certify the appraisal roll and we send those certified values to the taxing units? Every county is now required to have a separate website, a real-time tax rate website. You can go to texas.gov/property taxes to get a list of all the county websites that are out there. So starting in August, as those taxing units start calculating their no new revenue rates, their voter approval rates, and proposing what rate they want to adopt, they have to upload that information on the county website. A property owner can then go and pull up their individual property, and they can see a list of every taxing authority that levies a property tax on their property. They can see what their tax rate was last year. They can see how much they paid in taxes last year. And then they can see how much they would pay this year based on the final certified value and the proposed tax rate. So it's a much clearer estimate of property taxes, and it tells the homeowner or the property owner, is that taxing unit really going to increase my taxes or not? Because the legislature is tired of elected officials being able to say, we haven't raised the rate in 5 years. And that may be true. Maybe they didn't raise the rate in 5 years. But if they have an additional $2 billion on the tax roll, if they kept the same rate, then they've increased taxes. So this breaks it down to an individual level. And then those taxing units are required to list on that website their date, time, and location of their public hearings to adopt the tax rate. Because the legislature wants to get more people engaged in the tax rate adoption process. Actually, we will have in Hunt County, we'll get 15,000 people come to our office this summer. In the next 2 months, we'll have 15 to 20,000 people come protest. But when the city council meets to adopt a tax rate, or when commissioner court meets to adopt their tax rate, they may have 2, 3, 4 people at the most. The legislature wants to direct people to those locally elected officials who actually have the authority to lower your taxes. Now, and I'm not trying to throw the taxing units under the bus, they do have needs. And every time the legislature meets, they pass on these unfunded mandates to local government that they have to fund. So they may have a very legitimate reason for a tax increase. But if you show up at the public hearings, they can explain that to you. And if you disagree with them, you can voice your concerns. The beauty of this website is also that a property owner can communicate through the website directly with their elected officials. For each taxing unit that taxes your property, there'll be a question that says, do you agree with our proposed rate? Yes or no? And then you can provide comment in those boxes to your elected officials on why you disagree with their proposed rate. So I just think that the legislature is done a good job of trying to get people more engaged at the tax rate setting process, as opposed to only coming down and protesting the value. Again, our job is not to talk about taxes. Our job at the appraisal district is to talk about value. We had a lady call just today and she said, hey, I noticed that the estimate of taxes is no longer on the notice. Yes, ma'am, that's correct. Well, how do I know if I want to protest or not? Well, look at the value. Do you think the value is wrong? She said, well, I want to know if I want to protest or not based on the amount of taxes. Well, in August, you can go to this website. She says, well, if I wait till August, it's too late. I can't file a protest once I see my taxes in August. So the point is, you're protesting your taxes then. You're not really here to protest your value. You're wanting to protest your taxes. And then she never looked at it that way, and she said, well, that's a really good point. I'll wait until August and I'll see what the proposed tax rates are. And if it shows it's going to be a tax rate increase, you better believe I'm going to go down to City Hall and I'm going to talk to my city council member and I'm going to tell them I can't afford to pay any more taxes. Yes, ma'am, that's exactly what you need to do.
And I think that's the whole point. And we only have a few more minutes. And if we run a couple minutes over 6:30, that's okay. But this is obviously a hot button, and we have to understand, again, the nuts and bolts of what we're talking about here. And I think that was a great visualization, because that really brought it. I was literally visualizing that in my head, was somebody was saying, well, I don't want to protest it if my taxes aren't going up, but you're talking about your appraised value. The protest is about what you guys are appraising their home at, not at the tax rate. And so a couple of minutes I want to spend on this, because this is also what's going on. And I apologize, we have a lot of questions that are going on. And Keita, yes, you are absolutely right. There's a lot of other things that we can talk about with the over 65 and everything else. And you know what, we'll probably have Brent back on, because there's a lot more that we can talk about. But the thing that I want to discuss is people throwing things out there about trying to offset property taxes or abolish property taxes altogether. And gosh, this could be another 3 hours. So yes, it's only going to be a couple of minutes, but I want people to understand, especially our realtor community, when the people are talking about this, especially with our gubernatorial candidates or state elected officials, and talking about, just like you did, when there are candidates or elected officials saying, well, I have not voted, or I will not vote to increase your tax rate. That is, don't look over here, but look over here. And it's a deflection, because just because the rates haven't increased doesn't mean that your tax burden hasn't increased. And you guys need to understand that. And so the big thing that I'm hearing going around right now, especially from the governor's race side, is the fact of, here's what we can do. Let's legalize marijuana. Let's legalize gambling. Let's do some other things. and that will offset our property taxes in the state of Texas. And I think we were talking about this the other day. It was like 73 billion is what the cost was to fund local governments. And we found this out at our Texas Realtors 360 meetings throughout the state, that was only going to contribute to something like a little over a third of what that was. And so when you're talking about, I'm not saying don't legalize marijuana and don't legalize gambling. I'm just saying that's not the solution. So if somebody says, well, that's what we need to do, we can get rid of property taxes, they're wrong, because the deficit is the amount of money it costs to purchase Twitter. So that's that kind of visualization right there. We can do things to help provide relief, which is what you talked about earlier, Brent, but that is not a unilateral solution for the increased property taxes.
Well, it just dawned on me when you said that about purchasing Twitter. Elon Musk is moving to Texas. Maybe he can just maybe he can just pay everyone's property taxes this year and give everybody a year's break. We'll see.
I think that's what we've already said. Call Musk in the chat comments. Right. And so it's not about Twitter having anything to do with it. It's about the fact that, Marcia, is that the deficit, and bringing that realization in, that's been a hot topic in the news, that Twitter was purchased for $45 billion. Mm-hmm. And the deficit that would still be there to fund the local governments, even after legalizing marijuana and gambling, would still be, equal to what it just cost to acquire Twitter. And so that's something that we just have to realize, that there's not a one size fits all solution. And as Sherry just said, because she's a smart lady, show up, stand up, speak up. And that's what we need to do. And Brent, you just said that. We gave a website in the chat box right now that we can get connected with our local elected officials and the taxing entities to be able to sit there and say, here's why I'm disputing this. Here's why I think this is wrong, or this is egregious. And again, guys, we could do this for 2 more hours. We would love to stay on and talk to you about this more. And you know what? We'll have a revisit. Right now, we wanted to have this, especially with the assessments just going out, to talk to Brent, talk about how this is going on, but we still have time. The tax setting, the budget setting process and the adoption of the tax rates, you said, is going on in August and September. Isn't that correct? That's correct.
And so I want to just mention the website that we talked about. Don't tell your clients to go there yet, because there won't be any information there yet.
Okay.
Until we certify the appraisal roll and they actually start calculating those rates, the website won't have any useful information. But starting in August, please direct people to that website, because that's where they can go find out if they are truly going to have a property tax increase or not. Absolutely.
So here are the things to take away, guys. And we appreciate your comments in the chat about this. Was really helpful and great information. And that's what our goal is to dispel rumors, get that factual information out there so we can disseminate it to our clients, and to the consumer public. Thank you, Adventure Taco. I just love saying your name. That's pretty much the best, again, the best name that we've had on the show. But guys, we gotta get involved. And so that's why getting involved at your local association, getting involved in TreePack, understanding what your local officials are doing, talking to people like Brent is so resourceful. But right now we can still help our clients. And people that we know, not just our clients, but people that are in our sphere of influence. There's still an ability to protest that assessed value if there is a true reason to do that. And we still need to do that. So educate your clients if there's reasons, like Brent said, that your home is not worth what your neighbor's home is worth, then let's talk about it and let's help these people protest those taxes effectively. And that's the last thing I kind of want to say about that. Filing your homestead exemption is free, guys. Of course, there are people and there are entities that will send you something to pay them to file it for you. Go on your appraisal district's website and there is information on there, or reach out to your local realtor person to help you do that. But you still have a couple of days to do that for this year. April 30th is still the date on that. And then the other thing is filing your protest and doing that. There are companies out there that will charge you 30, 35, 40% of the reduction to do the protest on your behalf. And really, guys, we can't do the market value or just the comparable property protest. It's going to be probably on condition of the home. And I think, Brent, you said this when we were, again, off camera. You're going to need some help to do that. You as the homeowner are going to be the one that has to actively protest and give that supplemental information of the condition of the property. So don't enlist a company. If you really have things that will change your property value, do it on your own, and reach out to a trusted realtor professional.
Yeah, I think that, no one knows your home better than you do.
Yeah.
You can hire someone to do it for you, but you're going to do a much better job. And it's a very simple process. You like Ashley said, you can do it online from the comfort of your own home. Most appraisal districts have systems that allow you to upload pictures and documents through the portal. No need to come down to the appraisal district unless you really want to. We're happy to have you. And I don't want to discourage anyone from filing a protest. I mean, anyone who feels they should, absolutely. That's what we're here for. Please do it. But I just think that you know your property better than anyone. It's a simple process. Do it yourself. You may ask for help from your realtor friends or repair people to give you some estimates.
Yeah.
But it's a very simple process. And contrary to belief, we are really nice people at the appraisal district. I promise you. We want to help you as much as we can within the boundaries of the law. 100%.
Well, Brent, I have to say, between you and we had Ken Nolan on last year, who is your counterpart in Dallas County, and we can demonize Dallas County all day long, but he's a hoot and said the same thing. And so that's the biggest thing is understand the people that are at the appraisal districts, they have homes, they have families in homes, they have friends in homes, and nobody wants anybody truly taxed out of their home. But this is a multiple tier process, and we need to be involved in every aspect. We can't just be involved in the reactionary piece of getting those assessments in the mail every April. So, Brent, I appreciate all your time this evening. And again, we could go on for a couple more hours. And I do want to have you back on and we can talk about the over 65 exemptions and different things that we can do to maybe help create the dialogue to help create some relief in different aspects with investors, over 65, all of these other things. But ultimately, thank you for kind of dispelling some myths and then also creating some clarity in our current processes and the things that we have going on right now.
Well, thank you for the opportunity, and I'm glad to see so many people interested and willing to listen and learn. And hopefully now they can take all this information and spread it out to the general public so everybody has a great understanding of how the system works. And I'm happy to come back anytime on any other topic, property tax related or appraisal related. So yeah, I'm glad to do it any other time. You bet. Thank you, Ashley.
Absolutely. And I appreciate it. So enjoy the rest of your evening, and everybody tune in again. We will have Brent back on and we would love your feedback. So keep commenting in the chats, and we will start to put some answers in there for some of the questions we couldn't get to. But Brent,